This is not what we really want, and it's all about clarity on this show. It's very important for us, for our viewers, to understand the concept we are talking about. So, in today's conversation, I want to talk about no doc business loans. 7 massive mistakes to avoid so you can get a huge loan the first time around. Don't go anywhere. You're going to love today's conversation. I guarantee it. Edition of the Awesome Sir Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk about no doc business loans. 7 big mistakes to avoid so you can get a huge loan the first time around. The first mistake is loan proceeds, so no clarity on the use of funds. It's really important when you apply for a no doc business loan that you have clarity on the loan proceeds. In other words, you need to explain to the lender what you're going to use the money for. It's really important because lenders have different requirements, sometimes regulatory requirements to know what kind of proceeds, what kind of purposes a business is going to use the money for. Okay, so simply because you have no documentation business loan doesn't mean you have no obligation to explain the use of loan proceeds. It's really important. So the thing here is that make sure that you clarify that during the loan application. When they call you, in other words, when you fill out the form, that's number one. If the company calls you to know more, do not ghost them. And I don't care if you have, let's say you have good credit or poor credit, doesn't matter. You have to be really clear about that, okay? So when we talk about use of loan proceeds, there are a lot of purposes that are legal when it comes to using the money, okay? You can use the money to purchase real estate or expand operations, okay? You can use the money to purchase equipment. You can use the money to purchase inventory, okay? You can use the money to increase working capital. And the thing here is that obviously this list is not exhaustive. There are a lot of ways you can use the money to take care of your business, but the purpose must be related to your business and it must be legit. So make sure that you clarify that. You clarify that to the lender, but you yourself must be clear about how you have to use the money. And the thing is, do not underestimate how important this is. You might be thinking, oh wow, this is basic, this is self-evident. No, it's not self-evident. We have actually filed tens of thousands of loan applications on behalf of clients, and we've seen this time and again. People have no idea what they're going to use the money for. So mistake number one, no clarity on use of funds. Mistake number two, we are talking about credit rating. Not knowing your credit ratings. I'm talking about personal and business. Okay, when we talk about a no documentation business loan, this doesn't mean that you have to actually you don't have to provide a credit rating. So the lender is going to pay attention to your personal credit score, but also your business credit score if you have one. Okay, so it's really important that the mistake of not knowing your personal credit ratings before applying for a business loan may lead to a loan denial if your credit has issues that you may not be aware of, right? This is really important. So the credit reports clearly outline how dependable you are when it comes to payment of your loan, okay? And just credit card debts, business loans, personal loans, just loans in general, okay? So it's really important to make sure that your scores are accurate, okay? So before you apply for a no doc business loan, please check, double check, triple check your credit ratings. And again, I want to emphasize that you have to do this both at the personal level and at the business level. Personal level, you want to go to a website called annualcreditreport.com, where you have a right once a year to download a free copy of your credit reports and score from TransUnion, Equifax, and Experian. It's free. Now you also can sign up for a service that allows you to monitor your credit all year long without paying a dime. You can go to NerdWallet, Wallet Hub. Okay, you can actually go to Credit Karma, or you can go you don't have to be a card holder. You can sign up for a service from Discover, from Capital One, they allow you to monitor your credit. So that's on the personal side. If you want to check your business credit, you first of all you need to sign up with Dun and Bradstreet. You need to get your DUNS number, okay? And actually, those are credit bureaus. I'm talking about Dun and Bradstreet. I'm talking about Experian, and I'm talking about Equifax. They allow you actually to, I mean, you have to pay something, but they allow you to check your credit rating. In other words, you want to have what kind of information they are archiving on your behalf. They are archiving on your company. So I really recommend you, and this is something we have done research on. It's really, really important that you have a clear idea of what your credit is before applying for a no-doc business loan. Mistake number 3, business plan. Not having a business plan. This is a biggie, boss. This is a biggie. Actually, the thing is, people believe that when we say no doc business loan, that's just like, I'm just applying for a business loan and I don't have to provide anything. Come on, boss. Come on. Can you imagine somebody giving you a $100,000 or $200,000 or $250,000 or $500,000 without documentation? Come on. There has to be a minimum. There has to be something that you have to show that shows that you are indeed a legit business. You are a viable business because the lender is interested in your ability to repay the loan. Think about that. So that really makes sense that they are clear about where the cash flows, where the money is coming from. So no business plan is a no-no. It's a big no-no. You got to have a business plan. Okay, very important, boss. Okay, big decision time. Big decision time. Do you currently have a business plan? Are you looking for a no-doc business loan? Whether you're looking for a no documentation business loan, a low doc business loan, because we have no doc and we have low doc, or you're just looking for a regular documentation business loan, you got to have a business plan to actually beef up your chances of being approved. Let's be real here, right? Let's be real. I'm not saying the business plan is going to make you be approved. It's going to help you be approved in general, but not having it may disqualify you. Not having it may actually lend less credibility to your file. So it's just such a cheap thing to do. $150, $200, $250. Just hire someone online on Fiverr or Dunner, or you can go to Upwork. You can go to freelancer.com, TopTal, and so on and so forth. Okay, you hire someone and they just take care of it, or you hire somebody locally, somebody who understands your business. Okay, somebody who understands your business, that trains in your industry. Okay, or if you have talent, you can actually write this yourself. Okay, or you can just buy business plan software to actually do this. So you have Life Plan, you have Biz Plan, you have Enloop. So there are a lot of software tools out there that allow you to do that. Okay, so why are business plan important? For several reasons. They provide a clear outline of action for yourself if you want to reach your goals. It is also good because it provides clarity for our lenders and investors. Okay. And the good thing is that business plan also are critical because they establish a clear timeline of when a company can expect to achieve goals. Okay, they offer a clear way to track progress as a company grows. This is really important, and it allows lenders and investors to see the viability of a company. So there are 10 important components of a business plan. 10 important ones. I'm talking about an executive summary, business description, market analysis and strategy, marketing and sales plan, competitive analysis, management and organization description, products and services description, the operating plan, the financial projection and needs, and the exhibits and appendices. Mistake number 4, financials. This is also a biggie. So not having updated financial records. The thing is, you don't need to show the lender these documents because the loan is no documentation. However, you need to try to maintain accurate financial reports for yourself. Boss, I'm talking about you, for yourself and your business. Because if you're running a business and you have no idea of what's going on internally in terms of the numbers, you're just making mistakes. You're just playing like you are really, really, really making a big mistake, honestly. And I can't go to that level. I can't let you do that. So if you're running a business, and I don't care, I don't want you to have a complicated process in place and a complicated accounting process in place. You don't have to if you don't have the resources for that, or if your organization does not demand that. The thing is, you got to have a basic way to track what comes in, what goes out, right? Expenses, revenue. That's just the basic accounting requirements here, okay? And again, you don't have to do this. You can have a software where you just track your expenses, or if you just want to have a basic way of doing things, create an Excel spreadsheet. But you got to create an Excel spreadsheet, because not having a proper accounting process carries consequences, bears consequences in terms of regulation, because some industries are really regulated. In terms of taxes, if God forbid your ass got audited, if your ass gets audited by the IRS or the state tax authorities, you might get in trouble. So we don't want that, okay? It's important to have proper financials. Again, I'm not saying you have to actually provide these financial records to the lender, but those are for yourself and those are for regulators. Money, 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 money. The financials will help you see the level of money in your business. I'm talking about your cash position. Let me give you an example. If you actually take a statement of a financial statement, like the cash flow statement, this statement shows the cash inflows and cash outflows from operating activities, financing activities, and investing activities. So those are really important for you to know what's really going on. So financial reporting can help your business identify your success, identify business opportunities, build trust, expand your business, right? Help reduce your tax burden, very important. Help during tax time, I've said this before, and reduce errors and mistakes, okay? It's important. So how often should you prepare financial reports? It really depends on you. Basically, monthly, quarterly, and yearly is important, okay? Again, for you to have an idea of what you go or where you're going. There is no one-size-fits-all approach when it comes to preparing and analyzing the financial reports, okay? So it's really up to you. But again, we are recommending that you do this thing on a monthly basis, quarterly basis, and annual basis. Mistake number 5, having the wrong loan. So applying for the wrong type of loan. Yeah, I hear you. You're probably laughing right now, but this is for real. People are making these mistakes. People are applying for a loan that they're not supposed to, because see, the thing is, when you are looking for a no-doc business loan, maybe you're just thinking about having money. You just want some cash to take care of stuff in the business. You just want to have some liquidity to expand the business. But if you are applying for the wrong type of loan, your chances of being denied are high. Okay, so you have to be very careful here. So first of all, you have to identify the needs, and you have to identify how to actually close the gap created by that need. Sometimes you can have a collateralized loan. Sometimes you don't have a collateralized loan. In other words, you can apply for an unsecured loan. Now, let me just say this, in case you haven't actually understood it so far. When we talk about a no-doc business loan, usually if you don't want to provide any documentation at all, you better have a high credit score. Okay, that's number one, a high personal credit score and a high business score, because the lender wants to see something. That's number one. Number two, they might check your liquidity level by asking you to connect them to your bank statements. Okay, so be prepared to do this. So when we talk about no doc, it doesn't mean no doc at all. I mean, it just means that you don't have to prove income, for instance. Okay, but your business has to be legit. So in other words, you might be required to provide licenses and permits depending on your industry. So applying for the wrong type of loan is a big mistake. And so when we talk about choosing a business loan, how do you do that? Well, first you have to nail down why you need a loan. You have to be clear about that. Let me ask you a question, boss. Big decision time. Have you nailed down the reason why you need the loan in the first place, why you needed the loan in the first place? Talk to me about that. Those are things you have to be clear about. Again, be very sure, because this is the pitch you're going to make to the lender. so that the lender understands that, do you want to pay for inventory? Do you want to pay for a marketing campaign? Do you want to acquire another business? Do you want to take care of payroll, to buy commercial real estate? Talk to me about that. You can also choose a business loan. So after you nail down why you need a loan, figure out how much you need. You want to take an honest look at your credit worthiness, okay, both personally and business wise. You want to explore your lending options, and after that, you can decide and apply. I'll be right back right after this. Don't go anywhere.
Finest, yo, Mr. Killer, and call me señorita. Ay, papi, got me dreaming. My legs up on the ceiling. Oh, yeah. I know when he come, he ain't never gonna leave. No. He did the night run, that's the way I wanna be. So don't think.
Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation today about the 7 big blunders you need to avoid if you want to be approved quickly for a no-doc business loan. Number 6, legal setup. So altering the business structure is a big mistake. So let's say you just started the application as let's say a sole proprietorship or as an LLC, and in between you change to an S corp or a C corp or an LP. Now, I'm not saying this is bad. Hear me out. This is not bad. The thing is that if you do restructuring days before the loan application, this might send a signal to the lender that, hey, listen, this could be a problematic company, because you are sending the wrong signal about the business leadership to the lender. Because the lenders want to see stability in the business in terms of the vendors that you regularly work with and so on. They want to see also stability in terms of leadership. They want to see stability in terms of the internal structure, the internal dynamics in the business. Okay, this is really important. Now, this could seem like a non-issue to you as a business owner, but to the lender, this could be very important. So let me give you an example. If you are a sole proprietorship, it is good not to change the type of structure you have before applying. Okay, and obviously it's not even good to be a sole proprietorship if you want to get a no-doc business loan, because there are other dimensions to the whole equations that make it very let's say improper. We advise folks on this show to always make sure, if you are applying for a business loan, to have a legit business so you can preserve your personal assets. Okay, so when we talk about business legal structure, we are talking about how you register your business at the state level, but also at the federal level. In other words, how you file your taxes. Okay, obviously business registration happens at the state level, but it carries consequences at the federal level, especially when it comes to taxes. Really important. So when we talk about business legal structure, this is important because for our taxes, liability, paperwork, the hierarchy, okay, registration, fundraising, and there are some potential consequences for choosing the wrong structure. Okay, so factors to consider before choosing a business structure. You want to think about flexibility, very important, complexity, liability, taxes, control, okay, capital investment, because some business structures are more expensive to set up than others, and also think about licenses, permits, and regulations. So here you have it. Mistake number 7, loan terms. Loan terms. Not reading the loan terms before signing. And this is another important one. So let's say you are lucky enough to be approved, okay? Or you even before you applied. Because before you apply, there are some fine prints. And those fine prints are really important. Now, you don't have to read fine prints for credit cards, for personal credit cards, for business credit cards for that matter. Yeah, okay, because nobody reads them. That's understandable. But for business loans, especially for no-doc business loans, you may have high APRs, a lot of penalties, a lot of fees. There are buried in the fine prints. So you want to take some time to read the fine prints. The thing is that if you have no knack for business legalese, you have no idea what is written there, ask someone. Ask someone. Okay, it's always good to be sorry to be cautious now than sorry later, right? Those are really important. So you want to actually make sure that you read the fine prints, you understand what exactly you are signing on. It's important. So you want to actually, if there are terms that you don't understand, ask the lender to explain the terms, to re-explain. Okay, and if you're not satisfied with those terms, tell them during the application process or during the review process. Okay, money, 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 money. The terms will actually impact the amount of money you receive, but also the amount of money you pay back. Okay, in terms of the principal loan amount, the interest, and the constellation of fees you might be required to pay. So, boss, I really believe that you have to pay attention here. Okay, it's important. So, when we talk about business loan terminology, there are things you might see in the fine prints that are critical. For example, the APR, the amortization, the balloon payments. Okay, the bridge loan, the cosigner, if there is one. Okay, the credit reports, the debt instruments, the debt to income ratio. This could be an important element also. Your FICO score, gross income, interest payments, loan commitments. Okay, I'm just throwing out a bunch of terms here because those terms are quintessential that you need to understand them. You know, things like origination fee, personal guarantee, prime rate, principal and interest, promissory note, refinance transaction, repayment period. Okay, unsecured loan. So here you have it. There are a lot of loans out there. There are a lot of terms out there that you really need to have a clear idea about. Very important. Thank you so much, boss, for your attention to this conversation. I really appreciate it. I was talking to you about no doc business loan, 7 mistakes, 7 big mistakes you need to absolutely avoid if you want to get approved the first time around. So we talked about no clarity on loan proceeds, no clarity on credit ratings, no business plan, no clear financials for yourself, picking the wrong loan, having the wrong legal setup or changing the legal setup days before the loan, or and not understanding the loan terms. Thank you so much for your attention. I really appreciate it. I will see you next time, but until then, remember, stay marvelous.